Thanks for tuning into the trade setup. I'm Neeraj Shah. Good morning. Just silencing my phone. Okay, let's take stock of the situation first. This whole conversation around tightening, and there are different views out there, but we respect certain people and their views, and therefore thought it pertinent to get in Chris Wood's view. Chris Wood says that the Fed tightening expectations are now at the highest since this tightening cycle began, following the Federal Reserve's uh, universally accepted hike in the federal funds rate. Net net, he's saying that greed and fear's guess is that this is the peak in tightening expectations, barring some Ukraine triggered surge in energy prices. Now, if you remember, this commentary is similar to what Jeff Dennis told us in the trade setup yesterday. So let's see. Anyways, Indian markets are being very resilient to the global market indifference, if you will. So that's great news. Look at the global markets, for example, yesterday as well. The US markets didn't have a very good day, sober compared to day before yesterday. But if on a 3.5% NASDAQ cut, the Indian markets didn't budge at all, wonder what this move does. Interesting though. Watch out for the dollar index as well as the CBOE VIX. Well, the dollar index certainly has inched up a little bit from those 110 odd levels to 112.67. But the VIX is well behaved, which is a good sign. Keep in mind, yesterday when we did the spaces as well, viewers, with those two global experts, and I think it's a conversation worth listening to, by the way. It'll be there on our Twitter platforms, but not too many people tuned in for the spaces, surprisingly. But two very eminent experts who both and global in nature, both of who said that they are very bullish on India, and they are watching out for the dollar index as being the key trigger. If the dollar index starts coming off vis-a-vis the rupee, and dollar INR equation starts coming off, then that's a big relief and a big trigger for the Nifty. So bear that in mind. The SGX Nifty should come up on your screen next, and let's see what that is indicating. Well, I'll start marginally in the green. So yesterday's resilience turns into a bit of a green move this morning. Let's see if that lasts. So what's the trade setup? I think I've used the term resilient now too much, but frankly, I've given this as my trade setup as well, more resilient than what most believe. But a sideways move is certainly possible over the course of the next few days. Global chartists talk of a breakout moves in Nifty post a small period of consolidation subject to DXY steadiness. This also I mentioned. What I haven't mentioned thus far is that smart money is now talking of investing in critical area PSUs with low utilization levels. Somehow the name PSUs is now coming back thick and fast. So there are a lot of people who are talking about how in areas where the private sector may be dominant, but if the PSU is a long-standing one and has lower capacities, then the PSUs will start coming into the and start competing with the private sector company as well, because PSUs are getting orders, especially technologically well-equipped PSUs. Yeah, day before yesterday, I saw an announcement about how Midani has done a tie-up with PTC, a tech tie-up for a particular thing. So Cochin Shipyard, and I'll talk about that today, has gotten an order as well. So like there are a bunch of PSUs or PSU-like companies which are kind of getting very serious about the work that they are doing. And PSU banks are a shining example, right? They're churning out gains every single week, and it continues to remain a favored sector. Actually, let's talk about the PSU index, bank index. It was up about 2.5% yesterday and is up 15% in a month. Yesterday's gain was led by PNB, Bank of India, Canara Bank, and SBI. SBI has now made a new all-time high of 587. Canara Bank's closing price is near its March 2019 high of 382. No, sorry, the last line is a bit of an error from my end, but leave the results piece out. But otherwise, it's looking rock solid. And by the way, viewers, I haven't quite mentioned in my graphics. Let's move on. Yeah, I haven't quite mentioned in my graphics today, but there's a Morgan Stanley note on Bank of India which talks about a 50% upside from the current prices. That's quite staggering, really, as to what's happening with the PSU banks and the kind of um, um, pull that we're seeing from buyers as well as from the sell side. It's not a, I don't mean to say global brokerage is the best, but here's the deal. It's not a small, tiny tune brokerage in a small town. It is a world-renowned broker, which is Morgan Stanley, which is going out and saying that there's a 50% upside to Bank of India. That's quite something. PSU banks certainly right up there. Results today include a Titan and a Cipla. from amongst the Nifty, and then a bunch of non-Nifty names which are important, including TVS Motors, which has been a rank out performer. Marico and the commentary there would be interesting, and Escorts, after what VST Tillers and Tractors has said about growth, will be really pertinent to hear out from Escorts as to what they have to say. So do watch out for that. Now, what are the stocks to focus on in the session today? There are a bunch of contenders for the stock of the day. I've chosen Ajanta Pharma simply because this quarter, any pharma company which is disappointed on the margin front has gotten punished. We saw that with Laurus, we saw that with Gland Pharma, and we might well see that with Ajanta Pharma today. Revenues up 6% at 938 crores versus 884. The expectations were 930, so largely in line, but EBITDA declined to 196 versus expectation of 239, pulling down margins 20.9% versus 29.7%. The estimates were also 25.8, but look at the drop in margins and look at the drop in margins corresponding compared to the estimates as well. So certainly Ajanta Pharma very likely could have a crack today. Net profit declined about 20% to 156 versus 195. The expectations were 170. Now, even if the stock is corrected a little bit, and I haven't checked that really, I still think that this is a stock that could face some selling pressure. What could do well? A bunch of stocks. I haven't gotten down to the Nifty names because there are some really good results to talk about today. SKF India, strong show. Revenue up 12% at 1,078 versus 111 versus 966 crores. The estimates were 1115. So there you can argue that it is largely in line or slightly below. But EBITDA 214 versus estimates of 195. And look at the margin expansion, 19.9% versus 16.5%. In such a scenario wherein costs are so elevated, SKF India goes out and delivers a 340 basis points margin expansion. Quite stunning, really. Net profit up 33% to 155 versus 117. Beat on most counts except for revenues. I would reckon that the stock would get rewarded today. Amara Raja Batteries was a bit of a surprise package for me. Revenues up 19%, EBITDA up 33%, margin at 13.3 versus 11.9, so a bit of an expansion there. Net profit increased to 201 crores. The estimates apparently were 111 crores. Quite something really, the kind of beat that they've posted on the bottom line, largely on account of the fact that there's a bit of an uptick on the revenue front as well, and the margins have expanded as a result of which a big beat on the bottom line. So Amara Raja too could see some traction, who knows. Adani Enterprises, the revenue numbers were rock solid. The bottom line, not so much compared to estimates, that is, but still about 117% growth. EBITDA up 121%, revenues up 189. Difficult to find fault, but for the fact that yes, the PAT number is not as solid, and the EBITDA hasn't gained as much as the revenue. So obviously the margins would have come off a little bit compared to what was believed to be the case. But could react today. Who knows? Now it's a part of the indices and could react. Let's wait and watch. A standard disclaimer, of course, the Adani Group is in the process of acquiring 49% stake in Quintillion Business Media, which is the owner of BQ Prime. So just wanted to make that disclosure. Vodafone Idea continues to disappoint a bit. Revenues up 2%, but EBITDA margin lower than estimated. Net loss widens and much higher than what the Bloomberg estimates was. So Vodafone Idea, it's a trader-friendly stock, and which is why I bring it up. But otherwise, I mean, the proof of the pudding is in the eating. You just look at the last 1 year, 2 year, 3 year, 4 year performances. Compare that to Bharti Airtel. Compare that to whatever you want. The kind sign. I mean, unless there's a definitive turnaround, it's a bit of a hope trade. I know some very smart people who are usually taking some very smart decisions take a punt on Vodafone Idea, and I fail to understand why. Be that as it may, these numbers don't inspire much confidence. So if you're a Vodafone Idea investor, well, watch out. May not be a greatest of days. Sriram Silk Mills, though, and GMM Pfaudler, I thought did well, both of them. Sriram Silk Mills, revenues up 32%, EBITDA increase, EBITDA margins increase, net profit increased 52% to 80 crores. Strong show by Sriram Silk Mills. As also by GMM Pfaudler, I thought. Revenues up 780 crores versus 647. EBITDA margins at 15.2 versus 14.5. Net profit at 97 versus 39 crores. You heard Saurabh Mukherjee on Talking Point yesterday talk about GMM Pfaudler. You'll hear the management today in conversation with my colleague Alex at about 1 p.m. today. So you might want to tune in and hear what they have to say about the outlook ahead. But GMM Pfaudler certainly looks like it has done really well in Q2. The numbers certainly show that. Cochin Shipyard is interesting to viewers. It's bagged an international order for commissioning two commissioning service operation vessels from a European client, interestingly, to be used for wind farm installations. And the client has the option to order 4 more such vessels within 1 year. I'm telling you, companies related to defense or equipment or shipyards or otherwise are now starting to get orders globally, and that is really big. I somewhere I read that this order could be worth about 1,000 crores. I'm not sure, by the way, but if it is, then it's a decent one, and could be interesting for Cochin Shipyard. So do watch out for that. I'm trying to look. Raymond, by the way, did well, if I'm not wrong. The highest revenue and profitability in the last 10 years. So that is interesting. Schneider Electric, sales growth was strong, but raw material cost hit the gross margins. So that is something you got to monitor. And Pratap's snacks. I think commodity prices softening their boosted profitability for them. Sales were up 20% QOQ, but gross profit margin at 28%, very strong, and therefore PAT was at 4 crores versus 11 crore negative QOQ. So that's actually a mixed bag. YOY was not that great. So these are a few other stocks that you should be watching out for. But like I said, I think Hero MotoCorp was mixed. Adani Enterprises was strong. Amara Raja was strong. SKF was very, very strong. So those are a few that you got to certainly watch out for in the session. This one, Ajanta Pharma, wasn't the strongest. Now, last but not the least, before we wrap up, something that stood out for me was this piece on Bloomberg. Tiger Global, which is, of course, a very renowned investor and a long-time investor in China, has pulled back from the region and is pausing future stock investments in China. For now, the firm doesn't intend to snap up Chinese stocks on the cheap and is taking a wait-and-see approach to investments until there is some more statements from Xi Jinping. Instead, the story says Tiger Global is focusing on India and Southeast Asia. Now, viewers, I tweeted about this as well. You've got to smell the coffee, read the tea leaves. If you join in on our Twitter spaces, which we do nearly every Thursday, but once a week for sure, you will see people tuning in from New York or the US trying to figure out how to invest into India. This is retail crowd talking about wanting to invest in India. There is a change that is underway and been there now. Actually, it's not turning. I think the tide has already turned, and which is what explains India's outperformance. So if we are in denial about why India is doing something different this time, we got to wake up and change the way we are looking at things as opposed to what it could be otherwise. Strong showing. Let's wait and watch if that continues. Of course, watch out for the dollar index. As I said, if you tune into yesterday's space, most people said that if the dollar index behaves well and it starts correcting versus India, then you got a chance for a breakout move on the Nifty from the current levels. So bear that in mind. Thanks so much for tuning in today. Have a great weekend and watch out for Monday. There is a lovely report that Rhythm Desai of Morgan Stanley has written on the new India. We'll be bringing you that conversation, a very long format conversation, trying to understand why is it that Rhythm is just so bullish. We know that he's bullish on India. He's largely been bullish on India and paid him rich dividends. But this report just shows that in a very new light. We'll try and get you that entire conversation, a long format one, which might help you make some investment decisions for the decade, if not just for the next 6 months. Thanks so much for tuning in today, though.